Welcome back. Thanks for all the great feedback from yesterday's podcast with regards to the new rules as pertains to all the changes with the buyer agency side of the transaction. Make sure you listen to yesterday's podcast. We're going to be doing additional podcasts as that topic continues to evolve. And remember, your date to have all these new changes put in place, if you're going to be working with buyers, which all of you will be, is August 17th. So make sure you're paying attention to all the changes happening, and we're going to do our best to keep you at the very forefront of everything that's happening. And start with listening to yesterday's podcast. And actually, I believe we did it 2 days in a row, didn't we?
Correct. You got it.
Great. So today's podcast is helping you overcome the most annoying objection most of you are hearing in today's market. And it's simply, I'd list with you now, but where will I move to?
Yes, perhaps the number one objection that just won't go away. Are you still hearing from your would-be seller clients something that sounds like any of this? I'd sell today, but where would I move to? I'd love for you to list and sell my home, but I don't want to be homeless. Instead of saying, yep, I know, I've got you set up with a drip system so you'll see the newest listings. Isn't that what you're saying? You can do that, but there's so much more to it. What if your seller/buyer is being more proactive than you are? Here's some be honest questions, 4 in a row here. Are they going to open houses without you this weekend? Are they visiting new construction? Are they sending postcards to homeowners in their favorite neighborhoods? You know, you and I get those quite frequently over here.
We do. Letters and all kinds of things just from people moving here that want to live in our neighborhood.
That's right. Have they ghosted you because maybe they're working at it harder than you are? Maybe they don't know what you're doing.
Well, frankly, ghosted you takes up a number of different, forums. They could be talking with builders. They could be talking with other agents. They don't realize, because all you're doing is dripping listings on them, that you actually can sell in the community across town. You didn't do a very good job pre-qualifying them in the first place. And you didn't realize that, it turns out, yes, they said they wanted 5 acres. And so that's what you're sending to them. But it turns out what they really wanted was a private lot. And it didn't have to be 5 acres. And another agent who they met at an open house did ask the more drilled down pre-qualification questions and is sending them the information that they want. Now, do remember, I'm going to tiptoe back into a conversation we had during yesterday's show. We do believe that the drip campaigns, and I'm looking forward to someone telling me that we're wrong about this, but based on the way Julie and I read these the new NAR regulations, it does appear, frankly, that drip campaigns are going to be considered, quote unquote, working with a buyer, which means you're going to have some kind of formal agreement with the buyer before you can drip on them. A lot of you have big CRMs with lots of folks that you've been dripping on for long periods of time. Well, maybe, and I believe so, that those are no longer going to be folks that you can essentially legally send information to until you have a finalized, formalized agreement. And we're working on making sure our perception of these laws and new guidelines are correct. And who knows, they might change again before they actually be implemented. If I were you, essentially to hedge my bets, I would be calling every single person in your database. And I would be pre-qualifying the heck out of them to find out which ones, especially those that had homes to sell before they became buyers, which ones are the most motivated. Use our pre-qualification scripts that you get free in Premier Coaching. And again, Premier Coaching costs you nothing to join. Just go to premiercoaching.com and you get the first 30 days of Premier Coaching for free, premiercoaching.com. And the link below will also take you there, or you can just go to premiercoaching.com. And people always ask, and the answer is yes, that it does include a daily semi-private coaching call with one of our Harris certified coaches. So heed the advice I just gave you. Make sure you're not waiting around till, say, August 18th to discover what I just told you is correct.
Very well said. And today we're talking about those top 5 solutions to turn would-be sellers into listings. And since there are so much to this, how can they find the notes?
Well, exactly. So a lot of notes today. As I'm scanning down, I'm wondering how we're going to get through all this in a half hour, Julie, but
we can do it.
We will do it. All right. So the notes are available to newsletter subscribers. And just real quick, it's harrisrealestatedaily.com. harrisrealestatedaily.com is where all of the podcast notes live now. We are unable, unfortunately, to post our long form notes and all the show descriptions as we used to be able to get away with, because iTunes and all the rest of the platforms are limiting the amount of space that we can put under the actual, say, video on YouTube or podcast player button on iTunes. So make sure you do subscribe to harrisrealestatedaily.com for all the latest, greatest podcast notes. And also starting in actually this month, we're going to start sprinkling in all these interviews I've been working on.
Yes, perfect. Thank you for that. All right, so back to our top 5. There are more than 5, and you'll learn about those in Premier Coaching, but our top 5, or perhaps favorite 5 solutions to turn your would-be sellers into listings and then also have them buy with you. So Number one is probably my favorite. Consider building a home instead of chasing after the scarce resale inventory. There are several advantages to this option. First, many builders are buying down interest rates using their in-house financing. The buyer can lock in a better rate this way. And next, the house is new. That's no rehab for them and no inspection disaster for you. Your client can get their home on the market a few months before completion and not have to move twice. And finally, when your client builds, they aren't having to compete in a bidding war. Builders with in-house financing also have superior mortgage interest rates. So for example, I looked this up, 2 days ago when I was writing this, in a 7+% interest rate environment. I think the going rate now is 7.4 currently. Toll Brothers has a 5.8% 30-year fixed. That's not even a 2-1 buy down, and that's not even an adjustable. That's a fixed. And that's just one builder example. So tons of advantages to building. And I just wanted to give a quick shout out to Federico Salvatore in Los Angeles, who just shook loose, not 3, not 4, not 5, but just under, I believe, about $6 million worth of business by selling two new construction homes and getting 2 resales as a result.
That would be our move right there. If you and I were
100%.
selling, if we were still selling real estate and we were in a inventory starved environment, we had sellers that wanted to buy, which fortunately most sellers want to buy. I would just be marching their butts over the new construction model homes, and they'll find something that they love. And, it's funny you mentioned Toll Brothers, but a lot of these other builders, what they've done is what humans do. The reason that the builders have an unfair advantage is because someone's going to be comparing new construction to resale. It's just natural. Now, new construction has a tendency not to have the same, maybe resale is going to have a better location. Let's, say it as it is. And so, new construction is going to have to compete, and boy, does it compete. So what they'll do is not offer obviously new everything, but also they're going to offer oftentimes more square footage, better amenities, and things of that nature. So definitely bring even the buyers that you have that are resolutely, I'm not going to ever move out of this particular community. Say, listen, let's just take a little gander at what new construction is. So at least maybe we can get some decorating ideas or have a sense of, really what we're saying no to. And do not be surprised when most all of them decide to go on contract. And like Julie just said, that gives you a great runway to get their home sold. And here's the thing. Maybe it takes 4 months, 6 months, 12 months, depending on the market and the time of year for their new home to be built. If it's a really big home, it could take 2 years. Well, you know what? That, essentially bakes in a commission for you when the house is done. Some builders actually will pay you your commission when the house goes into firm contract and the contingencies are waived. They won't wait for the house to close. Other builders will pay you commission and they'll break it into several payments at certain milestones as more deposits are paid. So, don't say no to new construction and really study the most of it. But if I were in a market where there was new construction, especially in the times that we're in now, I'd absolutely brand myself as much as I could as the new construction expert.
100%. And, I think the biggest myth, there's 2 myths about new construction. One is a lot of agents believe it doesn't exist in their market, and that's because they haven't figured out how to find it because it's not in their MLS. And number 2, that new construction communities generally don't have the same quaint, tree-lined streets, whatever. And, that's partially true depending on where you are. But it's also true that many of these neighborhoods, especially the middle end and the upper end, they have neighborhood parks, they have clubhouses, they have lakes, they have walking trails. They do have some really nice amenities. You just have to go find and figure out who's got what.
Well, there is, everyone should realize the other advantage, and it is an advantage, is that everyone in the neighborhood is going to be new to the neighborhood. So they can essentially create the sense of community in that neighborhood together.
Fresh.
Versus moving into a new neighborhood where they're going to have to just sort of figure out a way to lever themselves into the existing aristocracy, as it were.
Exactly. You got to keep Bob happy over there on the corner.
That's right.
Okay. So option number 2, consider buying first, closing, and then listing the previous home. Don't assume that your buyer, seller, prospect won't or can't utilize this option. They may have a down payment saved that isn't part of their home equity. They might use a bridge loan, although mostly they're not calling them bridge loans, they're calling them equity loans, close on the next home, and then sell the old one. You don't know if you don't ask. The advantage is that your client can make a non-contingent offer, secure their next home, and deal with their old house later. Make sure you know lenders who offer bridge loans or equity loans and that you understand how to explain this option. That's something that agents are not great at. The philosophy is, well, I'm not comfortable doing that, buying first and then selling second. Who does that, right? Maybe I'm an agent and I would never consider that personally. But you don't know whether your prospect is totally fine with that if you don't at least ask them.
Well, there's a lot of people that have the ability to buy without the sale of their home.
Sure.
The market's full of it. And let's just be honest, if your existing home has a 3% mortgage on it, interest rate on it, it might make more sense for you to hold that and make it into a rental.
I hear about a lot of that from our coaching clients right now.
And let me give you a little window into the future. The folks that are deciding to rent their homes out and buy their next one, well, obviously, sell them their next home. And a year from now, after they've been a landlord for 12 months, if this is a larger home with lots of larger home problems, they're not going to want to keep that home, even if they have a low interest rate. But what do you do to get the home sold for the most amount of money? You learn about assumable mortgages, and you then, it's very possible that the home could sell a normal way, buyer putting down payment and the rest of it, or the buyer could assume your seller's home, assuming the mortgage that assuming they qualify. So it's called assumption with release. And we talked about that on previous podcasts. We talk about that a lot in Premier Coaching.
All right. So point number 3, or option number 3, consider, this is your seller and you as the listing agent, consider selling first. Your seller rents for a while and take time to look for the right home. The advantage here is the seller has cashed out their equity and is ready to pounce on the right home, but without the pressure of organizing 2 closing and possession dates. Who are your go-to leasing agents? You should have some. Consider both traditional rentals, short-term vacation rentals that may consider a lease, and apartment complexes. Many have some great amenities that could work for a short or longer-term lease while you help your client find the right home to buy. You and I have a property coming up in Powell, Ohio that has been recently rehabbed, which I would consider, and I think you would consider short-term. We would totally consider a 90-day short-term lease in some cases, but you don't know if you don't ask. It's an option.
We're the landlords, right?
Yeah.
But I mean, obviously, this for anyone, maybe a couple or a single person would find that option palatable, but anybody with kids, that's going to be a big pain in the butt because they have to move twice.
Sure.
But yeah, in every community, I'll give you guys a little investing idea. It's to Julie's point. If you're real prolific in a particular community, and there often are opportunities for you to do a short-term lease for someone that's in between homes, you might want to actually consider buying an investment property and doing just that, because you can make an absolute killing on 30-day, 90-day leases. And these are going to be people that have the cash, have great credit. They're just waiting for their new home to be done or waiting for the seller of the new home to, in their possession date, whatever. And it also gives you a bit of an unfair advantage when you're going on a listing appointment where the seller says to you, I would buy, but where would I go? And you'd say, well, I just happen to have a house that you can stay in. Now,
that's right.
not for free, but you guys get the idea.
No, especially if it's furnished. And I think about relocating executives.
Yep.
I have a coaching client that's, moving from Pennsylvania to Florida, but not exactly sure where she would want to buy in Florida yet. So that's another possibility, somebody that's relocating and just kind of getting their feet on the ground. So again, a case of you don't know if you don't ask. Now, next, point number 4, option number 4, consider getting the seller's home on the market now, but accepting an offer contingent on seller finding suitable housing. You guys see this in the MLS from time to time. The buyer will probably want a specific time frame, but you can usually get 90 to 120 days to secure the next home. Many buyers in today's market are just anxious to find the right home and will be flexible with the seller's situation. This is a symptom of the seller's market, that the buyer will put up with the seller's situation. It's still a seller's market. The advantage to your client is they won't have to move twice, and you've negotiated for them enough time to look for the next place. A seller lease back to the buyer, who's the new owner, is another way to handle this.
Now, there's a lot of buggy boos in that particular point. Mm-hmm. Depending on the financing, the amount of time that a buyer or a seller can lease back from the buyer after the closing is going to be limited. Now, if there isn't such a limitation in the agreement, Julie's solution does give your buyer actually an unfair advantage when negotiating for said house. And I want you to think of it from a seller's perspective. So our seller receives 3 offers, or right now we know what, for every one house selling, there's 3 offers at least. So let's say our listing comes for sale. You're one of the 3 offers that you put in on that house. Let's say everything's the same, pricing condition, or terms, everything. But your buyer's willing to lease the house back to the seller. Now, lease the house back to the seller in their mortgage amount. In other words, wherever the buyer's payment's going to be is what the seller's going to pay. But your buyer was smart enough to build in some flexibility as far as what their time frame was to move. Thus, they win the house. There's another little clever thing you guys better be keeping in mind when you're working with buyers in this marketplace. Otherwise, you're going to find yourself losing more often than you should. And
there's a mistake wrapped up in what you just laid out for them. So thank you for reminding me of that. Don't assume that every seller wants a quick closing.
That's right.
You can lose a deal over that. You might even be more money to the seller and, even a stronger borrower.
Well, it goes on the other side too, Joel.
Sure.
Don't assume a buyer wants to do a quick move.
Exactly. So this is why we have podcasts and coaching about finding the facts.
It actually, your previous point, I think point 2 or whatever, point 2, when you were talking about agents are oftentimes fearful of having conversations with their prospective sellers about the idea of the seller buying their next home without the sale of their current one. Mm-hmm. And so they just won't have the conversation.
Correct.
Or the other mistake that they'll make is they'll just force that conversation onto their lender, and Larry the lender, even if this isn't Larry the lying lender, this is just Larry the lender. This is a good Larry. Larry's not going to make any money if the dude keeps his old. I mean, there's no mortgage there. If he makes commission off the bridge loan and the equity loan and all the rest of it. So probably the last piece of advice that Larry's going to be passing on to your prospective, buyer seller is that they should, keep the house and rent it or some scenario thereof. So just keep all these things in mind, that you're oftentimes going to have to be leading the way and understand how everyone is given incentive to, give advice to your prospective clients.
Well, and it's all about giving them options. That's why we allow you guys to access the notes. You can easily turn this 5-part solution into a standalone page of which is best for you. Here's 5 solutions to making it so you can buy and sell at the same time.
So let's even throw this into so right now in many of the upper end markets, if the market's slower, inexperienced agents will assume that the sellers are going to lower their prices. The sellers don't lower their prices. The sellers decide to keep the homes and they'll lease them out. And so what we're seeing in a lot of our very expensive markets is point number 5.
Thank you. Okay, so consider keeping the old house, turning it into a rental, at least for now, and then finding and purchasing the next home. You can handle the lease yourself or refer it to your favorite leasing agent. The home stays an asset for your client who can keep their low interest rate mortgage, or perhaps, Tim, to your point, maybe the house is paid off. Don't assume that this is not an option. You have to ask. Remember that Americans currently have record high credit scores. They may be more comfortable taking on this option than you think. In some markets, keeping the home and turning it into a short-term rental can be very profitable. If you're in a VRBO friendly market, it might be the best option for your client. We have friends currently that are doing this. They found a house that they have to have. They're doing a quick closing. They're going to move in that, take possession of that. They're trying to keep the old one as a rental first, see how it works, and maybe they'll keep it as a lease. Maybe they'll end up selling it.
Well, not only do Americans have record high credit scores, but they also have record high equity in their homes.
That's right.
I mean, there's trillions and trillions of dollars in equity in real estate right now. So again, don't just use your yardstick for financial security and all the rest of it, decision-making, tree, to make decisions on behalf of your clients. You have to ask them these questions. And again, don't just leave it up to the lender to ask the questions, because the lender's going to do what's in the best interest of the lender and push them towards a loan. You're going to have to be, essentially guiding your clients along. This goes, this tips back into the conversation we had yesterday and the day before, Julie, with regards to, I think, really the expanded role that buyer agents must be taking in a market like this if they want to differentiate themselves.
Yeah, about providing value, right?
Well, exactly. I mean, all these points that you just gave me and all the things we talked with them about on the previous 2 pods, this is all the type of content that you need to be providing to your prospective clients, so they actually want to pay you if, they have to personally pay you for your representation on the buyer side of the transaction, because you're providing all this extra value. And if you don't tell them that you're providing this value, if you don't show them through your actions that you actually are worth them paying, they won't pay you, and you're not going to be working with a lot of buyers. So again, we're going to be going more into the buyer agent side of the conversation in future podcasts. Julie and I do believe some of our, I think, guesses, frankly, projections that we threw out yesterday and the day before are on target with regards to how this market's going to emerge. Now, good news for you, in case any of you guys are kind of panicky, which I know a lot of you are, we do believe that ultimately the consumers want buyers agents. The consumers and the market will actually continue to have, for the most part, the sellers pay the buyer agents commissions. And we also believe the market is going to want the buyer agents commissions not to be greatly reduced for all the reasons that they've been there for a long time. I mean, Warren Buffett said, he's never haggled on real estate commissions on the transactions he's personally done, because he knows the market works. And I think ultimately what we're going to discover is, even with the added layers of disclosures, which is really what we're talking about here, the market works. The buyers want buyer representation. The sellers want representation. And it's all going to sort itself out. But in the little middle ground that we are in right now, you're going to have to be extra informed. You're going to have to be really comfortable and confident in explaining your value to prospective buyers. And when you are, it does give you an unfair advantage in the marketplace because a lot of your competitors won't have the direction that you do because you listen to this podcast and because you are a member of Premier Coaching. So do keep all these things in mind. Julie, what's the bottom line?
The bottom line is you cannot just wait around for listings to magically appear for your seller/buyer prospects in your MLS. That is just one little tool. So be proactive with different solutions like we laid out for you today. We gave you 5 solutions. You'll have more transactions. They'll value your expertise, netting you both current business and future repeat and referral business. You know, I imagine a scenario where there's maybe, let's say, a husband and wife thinking about making this move and they got stuck on, gosh, you know, it doesn't seem like how can we buy 2, or I don't want to be homeless. And they then come up with some of these solutions themselves. Well, what if we were to buy first? What if we were to rent first? What if we keep this house, turn it into a rental and move anyway? If they are having those conversations without you, then they're not seeing the value in you.
In other words, if they're going to the for sale by owners without you, if they're doing the actual marketing into the communities that they want to live without you, if they're going to the new construction sites without you, if they're actually doing the job that you should be doing, don't be surprised if they transact without you, because that's exactly what's going to happen.
Well, unless you're proactive and you do something about this, again, we made the notes available to you so that you can use this as, there's built-in scripts here. This could be a standalone piece that goes into your pre-listing package when you know you've got both a buy and sell side and this is an issue for them. There's lots of different ways. This could even be used as a lead follow-up tool, a conversation starter. So don't be lazy and just use the drip.
So I wanted to talk about this, Julie, but there was no smooth way for me to integrate this into today's topic, but it is important. So the Zillow showing agreement thing, Julie and I have been really studying this because we read it and then we compared it to what Nora was saying were the guidelines, the laws with regards to essentially these buyer agreements that everyone's going to have in place starting August 17th. And we don't think that Zillow's solution is actually going to be in compliance. We don't believe that it's even close to what is, stipulated in these guidelines. And I could be wrong. Again, Julie and I are just opinion makers and, coaches, right? So if we're wrong, if we're not interpreting something correctly, I'd love for someone to help me out to understand. But the Zillow agreements really are not in alignment with what appears to be the regulations, that are required for these guidelines and these buyer agreements. And I'm worried about that because I think there's going to be agents out there that are using these agreements and not realizing that they're not in compliance. And they're going to find themselves in legal peril. And we're just starting to learn about frankly, the nasty ramifications of not being in compliance with these new guidelines. Some of it's, at this point, we're not willing to talk about it because I don't think Julie and I feel comfortable with the information we have so far. But it could be very onerous for a lot of small and medium-sized brokerages, frankly, and individual agents. But here's my point. Zillow's not a broker. They're just selling you guys a lead. They provided you a form. Before you use any damn form from Zillow, you better get your broker's consent to use it. You better check that against your broker's legal. You better check that against the forms that your MLS is using. Do not use that form from Zillow with the assumption that it's going to protect you from litigation. It's not. They're not your broker. They're not a brokerage in the traditional sense.
Yes, I think there are layers to this. You make an excellent point, and there are states. I'm licensed in Texas. I know Texas has a very specific law that says you are not to make up forms on your own.
Really?
Okay? It's very, very clear about that. Back in the day, you could just, write up your own. You would call it addendum A, and you would put some language in there that sounded pretty good. And most of the time it was fine. But since then, there have been many states that have said that's not in the purview of your license. And as a result, take, for example, Trek that has all the forms, Texas Realtor Commission, because you're not allowed to make your own forms, they have over 200 forms that they have created and have been vetted by their lawyers and are compliant. To your point, if your broker hasn't said use this Zillow form because we've run it up the flagpole and it's totally legal, I don't know why you would do that.
I'm going to go to this level too. If you're a broker and you're telling your agents to use that Zillow form and that form hasn't actually been ran by the attorneys and had the MLS approve it, don't tell your agents to use it either, because as a broker, just as the commission sharing lawsuits did not go after agents, they went after the brokerages, right?
Correct.
That's what's going to happen if these new guidelines aren't followed. They're not going to sue, I'm guessing, the agents. They're going to go after the brokerages. So if you're telling your agents to use a form that's not in compliance, you are not going to be happy with the results.
That's right. Now, Zillow claims that they have taken it to their attorneys, But does that mean that Zillow is compliant under their rules? I still wouldn't. I wouldn't do it if it's not coming from your own board of realtors or your broker. I just would not risk it.
It's crazy. Honestly.
It is crazy. Now, I think that there's going to be layers to this.
Well, but also, Julie, I could almost guarantee you, and you and I know some high up people in errors and emissions industry, that none of this is covered by errors and emissions insurance.
I wouldn't think. And I think
I'll be shocked if it is.
Well, the next thing that's going to happen when we get up to August is that all this is going to be tested. And you're going to see lawsuits flying around.
Sweetie, it'll be tested in September, October, November, probably not this year, but next year.
Sure.
So what you're going to see is this is, of course, what's going to happen. You're going to see essentially some lawsuits start flying around as, the guidelines weren't, being followed by XYZ broker, and XYZ broker is now going to have to, and this is what's going to open the floodgates. The lack of compliance will force the whole, the whole process to be formalized.
Yes, I would agree with that.
So, the broker's lack of compliance or the perceived lack of compliance.
It's going to be forced because there will be fines attached to it.
Exactly.
And you're not going to be able to say, I didn't know. You're not going to get out of jail free by pleading ignorance because they've given a 90-day runway on this, and there's been a lot of discussion. NAR comes out with statements like 2 or 3 times a week that clarify. They had one last week. We talked about the FAQs that are like 100 questions long. You cannot say, I didn't know. You can't claim ignorance.
Well, didn't you also tell me, again, obviously Julie and I are doing our best to stay on top of all this, that the NAR's code of ethics or something, or some big sea change?
You're putting me on the spot here, but I believe that part of the thing said that you're no longer, it was along with the piece where you're no longer required to be part of NAR. You are not required to be part of your MLS, and as such, you are no longer required to follow the MLS code of conduct, and I think even the NAR code of conduct.
And that had a lot to do with basically co-oping and commissioning and all that was
So how's that going to go?
Right. Yeah.
So anyway, lots of things to talk about. This is an unfolding story. And what I would say is stay up to speed, of course, with our podcast, because we're trying to bring you the up-to-date, what's going on. But this is a time, because we got a lot of text and emails from clients today, where you're seeing your state association, your local association, your broker, your team leader roll out what has been deemed to be the new rules, the new compliance, and the new best practices. So make sure that you're paying attention, because this does not seem to be something that's just going to be like one national form, you sign it and you're good to go.
And this is going to be litigation thin ice for a lot of people, and they're going to find out the hard way.
Well, the floodgate opened with the original lawsuit, so now it's, people are
it's not done.
No, I don't think so either.
It's not done as of August 17th. It's just getting started, but in a different way. Here's the bottom line. Use the forms that are provided by your MLS. Use the forms that are provided by your broker, assuming they're provided by the MLS. Don't use forms provided by a lead selling platform.
There you go. And if you're not getting direction from your broker, you should be worried. You should be taking action now before it's August 17th.
That's right. And, Julie and I are, especially in this day and age, incredibly happy we aligned with eXp Realty 5 years ago. And if you're not with eXp Realty, let's have that conversation. I think, yesterday we had a conversation with a brokerage with 200 agents. We have another conversation going on with a brokerage that has probably realistically around 1,400 agents. Their brokerages are moving over to eXp Realty. Why? Because they frankly don't want to have to deal with all the changes that are happening, and eXp Realty is big enough that it provides for them a safe harbor, a safe place to land, so they can stay in the real estate business and frankly shed a lot of the liability. That really is the bottom line.
It's true.
Yeah, the conversations I'm having. And by the way, with every single one of these brokerages I've personally spoken with, they all make more net income to themselves.
Makes sense.
With moving over.
It's a business decision.
Bottom line. So yes, if you're a brokerage, if you're a team, if you're an individual agent, if you're a new agent, experienced agent, it doesn't matter. Let's have that conversation. Text me directly at 512-758-0206. So if you're looking to land the plane and join eXp Realty and you're looking for a sponsor, Julie and I are formally applying for the job of being your eXp Realty sponsor. Just text me directly at 512-758-0206. If you want to learn more about our eXp Realty group, just scan below and look at the show notes, and there's a link to our eXp Realty's group's website, and you'll learn why thousands of agents are joining with us every year. In the meantime, you guys have a fantastic day. We'll talk with you on the show tomorrow.